ARK Invest funds loaded up on Tesla stock on Thursday as Tesla fell more than 4%, dropping to 10-month lows. And the negative sentiment surrounding Tesla stock is not interfering with Cathie Wood from picking up shares of Tesla. On Thursday, Cathie Wood's ARK Invest management bought 216,000 Tesla shares according to the company's daily trade disclosure, based on the closing price of $162.5 on Thursday. That is a massive bargain. Cathie Wood spent $35.2 million on the Tesla stock purchase. Cathie Wood's Tesla trades were done through the ARK Innovation ETF in ARK Next Generation Internet and ARK Autonomous Tech. And as of March 15th, Tesla sits second in ARK with 7.62% of weight. And meanwhile, Tesla stock is the top-ranked holding in ARKQ with 9.6% of weight. Tesla has a weight of 5.15% in ARKW, good for 5th. And Cathie Wood's Tesla stock purchases Thursday came as the shares fell more than 4% to $162 in market action, hitting new 2024 lows and levels not seen since May 2023. And Tesla is down 19% in March alone. In 16 days of March, Tesla is down 19%. And Tesla shares went up 0.6% to 163.5 on Friday, which is not at all much. And last week, Cathie Wood and her ARK Invest fund scooped up a combined 143,000 shares Tuesday and Wednesday, according to the company's daily trade disclosure. And Cathie Wood began purchasing Tesla stock again in late December of 2023 after repeatedly selling Tesla early in 2023. And Cathie Wood pounced on Tesla as the stock traded below its 200-day moving average. And Cathie Wood's ARK tends to buy stocks when they are falling or well off their highs. But this has also backfired when Cathie Wood sold off Nvidia, thinking it's not going to do her much good. But since Cathie Wood sold Nvidia, the stock more than doubled from that, so she missed out on quite a lot of. Comes to Tesla stock performance, Wells Fargo downgraded Tesla to underweight, down from equal weight on Wednesday with a price target of 125, down from 200. And the firm's underweight rating is equivalent to a sell rating, and its price cut represents a 23% downside risk to current Tesla levels. And meanwhile, on late Wednesday, UBS cut its Tesla stock price target to 165, down from 225, and maintained a neutral rating on Tesla stock. UBS also lowered its Q1 delivery forecast to 432,000 units from its previous 466,000 view. The firm also cut full-year deliveries to 1.96 million units, down from 2.02 million previously. And with 2023 in the rearview mirror now, analyst consensus now has 2024 Tesla earnings below 2023's level, signaling another year of negative growth for this growth stock. And Wall Street expects Tesla earnings per share of just $3.02 a share in 2024, and that would be more than a 2% decline versus last year's $3.12 per share. Well, Morgan Stanley Tesla bull Adam Jonas last week issued an investor's note in which he cut his Tesla 2024 earnings projections by 25%, saying that the EV giant Tesla could potentially lose money this year. And Adam Jonas slashed his Tesla price target to $320, down from $345, which is still more than double from here, but maintained an overweight rating on the shares. Adam Jonas also whittled down his Tesla 2024 EPS projections to $1.51 per share. His previous view was $2.04 per share, with auto gross margins, excluding regulatory credits, sinking to 11.4% as the analysts foresee continued demand issues for the EVs. And the EV giant ranks 8th in the 35-member IBD auto manufacturers group industry. And Tesla stock is angling lower in 2024, falling more than 30% as the EV giant reported worse than expected Q4 earnings and revenue in late Jan. With 2023 in the rear view now, the EV demand continues to decelerate despite price cuts, which means that price cuts are not being very effective, and fleets are dumping EVs and strong hybrid momentum is competing for the marginal EV buyer, Adam Jonas said. And if there was ever a time for Tesla to potentially post a GAAP EBIT loss in the auto business, it may be this year. And Wall Street expects Tesla's earnings per share of just $3.02 in 2024. Tesla insurance registrations in China totaled 13,200 last week, which is up 5.6% the prior week, but down 22% compared to a year ago period. And through the first 10 weeks of 2024, Tesla China insurance registrations total 90,400, which was up around 2.6% versus the same time frame in 2023. And meanwhile, Wall Street consensus currently still has a Q1 deliveries of 487,000 units. Tesla stock has a 68% upside as the best house in a bad block of distressed EV maker is what an analyst had to say. Tesla's 2024 stock plunge is no more than an overdue correction and its price will eventually rebound to $275 is what Garrett Nelson had to say, and the forecast implies a 68% upside from Friday's close. And although the firm's shares have dropped over 35% since the start of the year, a pullback makes sense after the stock doubled in 2023, he said on Friday. And looking ahead, there's a number of catalysts poised to drive a rebound, he said. Chief among them is distress in the electric vehicle industry, which should put Tesla front and center again. We kind of view Tesla as the best house on a bad block in the Western market, looking at North America and Europe, is what Nelson said. And while leading US car manufacturers abandon EV growth plans in favor of hybrid alternatives, smaller firms are facing more existential dilemma. Just this week, one startup called Fisker prepared to file for bankruptcy, he noted. Vehicle sales have been slowing down across the industry, a trend that has cut into Tesla's revenue and forced it to slash prices on its model. But at the same time, the company is well positioned to stay afloat through any sector strain and can grow its market share over the coming years as competition falls out.